morning, good morning, good morning. It is 4:38 and I am here to show you a couple of things that I'm going to do on this market and the pre-market. Someone asked me the question of how it is that I set up my zones and what it looks like before I get into the market. And I can do that now. I can do that anytime, honestly. And we're going to start with QQQ and Apple. As you can see, I have this bunch of zones. It looks like chaos and cacophony. It doesn't matter if I only had like one or two. This is just because I'm on the 4 hour, so you can see all of my previous zones. But what we're going to do is we are going to clear the drawing sets. Yes, clear all those drawings there. The only thing that stays up are my price alerts. Clear the drawings here. And I'm going to show you how I find my zones. I use greatly the past to dictate the future, to predict the future, honestly. But we're going to go first to the 1 day 15 minute because you need a whole 24-hour period to see what the market did yesterday instead of the today 15 minute. Then you're going to go to the 1 day 15 minute here as well. All right, so what if I told you that every single day in the marketplace, somebody was telling me exactly what to do with my trades? It's not insider trading, but it happens every single day. Okay, who's that person? That person works for Apple. Apple tells me every single day what to do with my trades, and I'm going to show you why I use Apple as my key indicator for whatever my trades are going to be doing for that day. You want to see a massive rundown on QQQ, and then we'll put SPY over here because they all do the same thing. QQQ will react a little bit faster. SPY's reaction will be a little bit more dramatic, I would say. Turn this off, and we just want to have on the charts on the 4 hour. I guess do the 15 minute 1 day for that as well. And then let's say Microsoft MSFT. I don't have any charting done in Microsoft, I don't believe, so that's perfect. Nope, I don't. Now, there's a very neat thing that happens. For the most part, Microsoft, SPY, everything, they'll do exactly what Apple does to varying degrees. I don't know how this is, unless there's dramatic news with Microsoft. It's usually going to do the exact same thing SPY is doing. Now, if you look at Apple, Apple said, hey, we're going down. We have this nice little level here where it evens out. It's up and down the same. Microsoft has this nice little level here where it's basically up and down the same exact way. The only difference is Microsoft has a larger body and even wicks. We're going to have a large wick and we're going to push down. Microsoft had a large wick and it pushed down. I don't know what's making these all follow the exact same trend. Large wick and it pushed down. Large wick and it pushed down. You get two push down candles. You get two push down candles. It turns green. It wicks here on the bottom and it turns green. So a key perfect indicator that I'm looking for these trades is this right here. When this forms, when it lines up perfectly and there's a small wick or even a large wick on both sides, you're going to get a brief shoot up, which usually will engulf the candle. And a lot of times I'm just looking for it to meet this point right here. And I'll go ahead and add a drawing line. So my first trade, I'm only looking for it to meet this first candle. I'm not looking for it to push all the way up, just meet. And if you look at it, you'll see that it met the top of that first candle. Once it opened here, it pushed up some more. And when it hits that point, I sell. I don't try to see if it's going beyond. If it runs, I stay in the trade, but you'll know a runner, the difference in a runner because of how fast the numbers will be moving to the north or the south to stay in that trade. Now let's continue the Apple. So Apple pushes back down. Microsoft pushes back down. Big wick down. Big wick pushes down. It does it every single time. Apple pushes up. Okay, Apple pushes up over here, has a little hammer. Microsoft pushes up over there, has the wick, pushes all the way up. Apple gets a little wick, pushes down. Microsoft gets a little wick, pushes down. Apple's is a red little hammer there in the middle. Microsoft's is green. They're so tightly wrapped together. It happens this way every single time. Now on the Microsoft screen, you may see more green or red or whatever the case is, but it still reflects the exact same thing that's happening with Apple. You get this beautiful little T here, you get this beautiful little T here, you get a green there, you get a red here, You get a green, red going down this way. You get red and green on this one, and then you get the bounce up, boom, boom. You get the boom, boom, and then it bounces up. And then as the day runs on, you get that choppiness there. You get this choppiness here. You see what I'm seeing. You go over to QQQ, it's doing the same thing. You come over to SPY, it's doing the same thing. Apple's a major player in this market. Everything else seems like it kind of follows Apple. So I use Apple as my cheat sheet. And I don't think enough people realize that Apple is the cheat sheet. What Apple does, everything else will follow. You want to get out top, doom, 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 two there. You get the two here. Yes, the bodies of this candle is much larger, and this body is larger and this one's smaller, but it's doing essentially the exact same thing. The reaction time is slightly different. You get the two large green candles here. You get the two large green candles here on QQQ. You get the two large green candles here on SPY. If you don't see this, then honestly, I'm not sure what everyone is looking at, you know, and there's no wrong way to chart. But if Apple is what's moving the market because they have a 7% share, Apple is my key indicator. Before all of these zones that I draw, before anything else, I'm looking at Apple. So now I'm going to start drawing my zones, right? So we're going to place a line here, which was the low of the day. We're going to place another line here, which is where the actual candles close and kind of consolidate. And the reason I do that is, all right, I view the wicks as a spike in price, right? If the price spikes, that's not the real price. The real price is where all of these candles keep coming to. So a lot of people will they'll draw their zones using wicks, and there's no wrong way to draw a zone, but they'll draw their zones using wicks. But I want the most accurate picture, right? So if I use the wick, I want the entire body of the candle inside of the wick as well. So I will go wick to wick, basically. So in this situation, I would go from the bottom of this wick, because the wick would be the bottom of my zone. And then the halfway point is where that little purple line is going to stay. I right click there, I click add drawing, and I would draw my wick right here, right? And now I want to see if this reflects anything on the 4 hours. So now I've got it that I want to do the same thing for up here. The high of the day actually came in the pre-market, so I'll draw my line right there. Put it right above this one right here. Actually, I'll put it right there. And I'm going to do another one that actually touches this wick here. So then this will probably end up being a zone in of its own, but we'll look on the 4 hours. So that body of the candle there, I'll go ahead and add a drawing, do a rectangle, and I'll just do the body of the candle here. As you can see, the body of this candle completely engulfs those two there, almost lines up perfectly with the bottom of this one. And then I'll go and I'll do this, edit properties, and I'll go as far as right now, November 1st, and then I want this to begin back in June. So I'll go back to June, or we'll do May 31st, click OK, and then we'll go check that, and then on the same, we'll do the exact same thing here. And we're gonna go to November 1st, May 31st, click that, click OK. And now we're gonna use these two lines, just these two lines. This is where we're currently trading at. We're gonna put a 4 hour time frame up, and we're gonna see if these two lines that I've drawn hit anywhere, and I do mean anywhere, on this chart. And if you look, boom, we're right there trading in that zone. You come all the way across, we're perfectly right here trading in this zone. So I want to zoom in on this area, click, click, slide sideways, and look at that. I could have drawn this back further because honestly we bounced again right here. So let's say I put this back to, what is that, March or April? Let's say I edit this. Yeah, edit the rectangle. And then I put this back to April 1st. We'll go back another month. Click OK. And you see we bounced here. We came below, we bounced here, and then we broke through. Then we came up here and we bounced, broke through a little bit, but retested back underneath, broke through a little bit, retested underneath, and then you see the play out of the zone, but you see it took a little while before we finally broke out. And then every single time we break out of a zone, and that's the key, we're gonna go up to a zone, then we're gonna eventually either break out to the north or the south. And that's what I'm looking at. But for the time being, we're gonna trade inside of a zone. So this was actually just a time where we broke out and we kind of never stopped going until we hit that, that 460 point. Slowed down in here, came back up, slowed down in here, came back up, scroll to the right, came down a little bit, started going up some more, slow to the right, came down to right here, shot down to this 447. So the 447 for me would be one of the true zones of where we are, to the 450-ish area. I wouldn't even go to 459. I'd say like 455 is a true area, because these are kind of like breakouts, come back in, breakout, come back in, as you can see, and it really lines up right here at 455. So I would place a marker there for the future. Boom, right at the top of this wick. So that 455, 456, 50 area is great. You see, this is a breakout, but we always fell back below this line. I don't even count these two if you're looking at like maybe like a semi double top situation, but that doesn't matter. None of that matters. Let's go ahead and scroll over here. This is where we're trading at right now. Now you see on the 4-hour time frame that there's some confirmation, because these lines come all the way over here and touch perfectly this area where we consolidated for a while. So that can say that, hey, are we going to consolidate again, or are we going to continue to fall? And it doesn't matter what we do, just know that right now we're inside of that zone. So we're at the top of the zone right now. We're either going to break through and go up to this 433, 434 area right here, or we're going to stay in this zone for a little bit and just keep consolidating between 427 and 421 really, but we'll say 422 for the time being. And the reason I say 421 is as I track back, too far. The reason I say 421 is as I track back, the zone really starts like right here at this point. If you draw a little line, which is at 421.50. You see it gets choppy there, comes down below, gets choppy here again, shoots up above. So if I wanted to stretch my zone out even bigger, I could do it that way. Instead, I just place a price line and keep going. All right, so now let's see the key indicators on what Apple is doing compared to this. So now I'll go to the 1 hour real quick and show you how it lines up in the 1 hour, because my zones are going to stay there. As you can see in the 1 hour, it's confirmed. It stays there as well. And this is where we're currently trading this week. Boom, 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 top, go down. Boom, 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 top. So we're hammering that top. We're hammering that top. So the next theoretical move is the breakthrough. You see, we get a tiny breakthrough on Tuesday, but we came back below. We shot all the way down. We shot all the way back up, this perfect V. And now we're hammering, hammering, hammering. Do we break through? History says we do break through if you go back to June. But there's no guarantee that history repeats itself, because we still haven't retraced to where we started off in the first place, which is that 414 to 408 area where we stayed for a very long time before this move happened. But we don't have to go down there. We could stay here and consolidate for a while, or we could break out. History says October coming up, 2 more days in this month, that maybe we consolidate and start pushing up a little bit. If we start pushing up, that's a beautiful thing. We get some bad news for the FOMC, we could always push down, but news is completely different than what you would see in a daily market. And a lot of times, if you didn't want to trade on a news day, it would make total sense to just, sit back and get some more education, because news days are abnormalities. But news days are also days where you can make a lot of cash. So just be wary. Now we're going to zoom in right here for a second on the 1 hour. And as you see, we're hammering, 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 breakthrough, go back down, hammer, 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 hammer. So this is a very strong zone. Even though you see all these tiny wicks here on the 1 hour, you see this massive breakthrough. And like I said, wicks are spikes in price. They're not the actual price. The actual body of the candle's been down here. Pushed up a little bit, pushed up a little bit, and now it's here. Pushed up a little bit, pushed up a little bit, pushed up a little bit, and now it's here. Push down, now it's here. Push back up, then push down, push down, push down. And you see, this is what I'm looking for right here. Every day. Add a drawing, we'll do a circle. This right here is what I'm looking for. This is my key indicator of a massive bounce. When a price lines up perfectly, it wicked down and it came back next to this candle and stayed perfectly. And as you'll see, like if we're on a downtrend or an uptrend, they don't line up perfect. They keep going. It wicked down, it came back up and touched the bottom, but never, surpassed this. But when you see it go wick down, a lot of times right here where this wick is happening, it slows. It slows down. And then it slowly starts turning green. And then it hits right here and it fires off. It does it so many times. And I'm going to show you what that looks like on the 15. And that's what I'm looking for. I'm looking for this to line up and fire off. That's a 1 hour straight gain candle. That's a banger of a candle right there. You're talking about $3 straight. That's decent money. I mean, it's good money, especially depending on how much you invested in that trade, right? So we go to the 15 minute and you see my circle here. And on the 15 minute, you see it looks a little different. You get this here and you get that there, which is why you use both time frames, because this can trick you out of your trade. But the reality is that it's still lining up perfectly with this right here. Even if it wicked down a little bit, lined up, blow up. You didn't really see a wick, so this doesn't say that there's pressure coming from a selling point. It's just a natural course correction that happens in every single trade. It pushed down a little bit. As long as it doesn't blow through the bottom here as the body of a candle, like if it wicks down a little bit, you're good. If it blows down as a full body of a candle and it seems like it's pushing down, now you got to think about getting out of that trade. But because it doesn't become the full body and you see it push back up, yes, it's red. That's fine, because it pushed down from this point right here. Turns green again, lining up again perfectly. When you see that, you're good. When you see this line form from a red candle to a green candle and it's a perfect right there at 423.28 line, boom. Now you got a choice to make. It did have a big wick right here, right? So you got to say, okay, this is the spot where I got out, to be honest. I didn't keep going. It slowed for even a minute second, but I saw the wicks on this one right here. It lines up almost perfectly. I get out of my trade. If I go back to the 1 hour and I zoom in there, on the 1 hour, they line up. So it lined up here. And that's like, okay, 426.14, 426, say 30. What's the difference? To me, I was like, there's not so much of a difference in money. Yeah, that extra almost dollar to the upside would have made me a lot of money, but I was already satiated in my trade. I was good. So I'm like, I'm not gonna risk it, because had I risked it and it fell down or it stayed down for any period of time and now my theta starts eating up because I'm on a 0 day, then it's like, all right, it's a kind of a win-loss scenario. I want a straight win. It came up to right here, it slowed down, I closed out. All right, now we can go to any day and you'll see this any day, but let's go to the 15 and I'll show you a couple of other points where I got in or where you can get in. So the 1 day, another point where it happens again is we go all the way up here into my zone, and so now I'm like, it's got to reject, right? The reason it has to reject is if you look at the previous day or the pre-market, boom, 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 draw a line. We're there. We didn't even make it all the way up, and so if you see it rejecting before you make it all the way up, we've already made it to where we were in the pre-market. It's not necessarily going any higher. That's not to say that it won't, but it's not necessarily going any higher because we're in a supply zone. In that supply zone, I'm looking for it to reject. It did it all day long. We started at the supply zone. It rejected off the supply zone. We hit the demand zone. 1, 2, 3. I usually use 3 candles to confirm on the 15 minute. It bounced out of the supply zone, shot up. It bounced out of the demand zone, or Big Mama's house as Chris calls it. As you can see, we actually hit the bottom of my demand zone, which is perfectly fine. Wicked all the way, shot all the way up, got a wick pushing out of the supply zone, which is confirmation that we're currently at the top. And then from there, you're like, okay, when it starts pushing down, A trade here, as soon as it starts pushing down, I jump in a trade. I jump in a trade and ride it down. Boom, it has that wick. Now when it, the key level right here, right? Draw a line there. That's why I have all these lines, but a key level right here. And this is why you look at the entirety of the 15 minutes when you're trading. A key level is right here where it jumped. Boom, boom. So now I know as it's coming down, if it hits that, because I have this line on the screen already, if it hits 42.90, it might be time to hop out of this trade unless it shoots down to this 42.34 area. If it shoots down to 42.34, we're in the middle of several candles previous, we could push down further. When it hit that area, the 42.85, and it bounced, I'm out. One, it's the end of the day, and usually it's just like the morning, there's some choppiness that happens at the end of the day, but it confirmed a bounce where it previously bounced. A couple of small wicks, small wick there. That's enough to tell me to get out. You know, there's no reason for me to hold. If it slows down and it's matching up with the previous point of the day, even you could say that's getting scared out, but it's doing what history has already done. Why would I stay in that trade? Then we push back up in the after hours. I was right to get out of the trade. We push back up. Boom, 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 boom. Hammering again. Boom, 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 boom. Hammering again. We end right now at almost 5 o'clock with a positive, side, but we're down here towards the middle of where we traded yesterday. So if the market started right here for tomorrow, I wouldn't be looking to trade. But I'm going to show you a key point every single morning that I get, and it's right here at 9:45. So the beginning of the market's a wild, wild west. It's up, it's down, it's up, it's down. So the first 15 minutes, I usually ignore unless it's really just running. But I'm watching. So in that first 15 minutes, we came up here to where the previous day's high was, and I knew we were inside of a solid zone. So I hop in here at 9:45 as it starts to push down, and you see it lines up perfectly with this one, and then it breaks out and stops. Get out of that trade. Right there at 10 o'clock. I don't know why, I can't explain it. 10 o'clock every single day, there's a short-term reversal. There's a short-term pushback. So at 10 o'clock every day, there's a short-term pushback. It pushed right back up into this zone, and then it runs up and down for the rest of that morning. And like every 15 minutes, like I said, you had another opportunity to get in a trade. 15 minutes here, you get in a trade. Get out of the trade at 15 minutes. 15 minutes here, you get in a trade, fall, fall, fall. You actually get 30 minutes, 30 to 45 minutes here. I would have got out here because of how long this stayed in this area. It would make me think that maybe it was going to reverse on me. But you can stay in it for 45 minutes. You come all the way down here. You see it finally turn green. You get out. You get another, 30 minutes. Boom, boom, boom. You get another 15, 30, 45 minutes where it falls straight. You get this little joint right here telling you that it's about to reverse up. You get this going up, confirming that it's reversing up. You get this trying to scare you out. That's the big dogs trying to push you out real quick. A lot of people will sell right here, and usually they'll take a loss or whatever the case is. I hold to see what's going to happen for that next candle, especially if it doesn't push all the way down here on the actual candle. I'm not going to get out of that trade. Shoots up, another 30 minutes. You got another chance right here to just wait and see what happens. This is a wait and see point. This is not a trade point. But then you see a lineup right there. You get the wick up. You see a lineup right here turning green, and you go, okay, I can make that play. Boom, shoots all the way up. You get a nice little amount. So this is what? 42.75 to 42.25.75 all the way to 427.50. That's a great push right there. Starts wicking down, you get out of your trade. Boom, you get another great push right here. Get out of your trade when it starts wicking up. Boom, you get another good push before the market closes. And I think you're allowed to close it in this candle right here too. So you see, every 15 minutes yesterday, we had an opportunity to trade. If we go to a prior day, let's say we go to a 5-day, 15 minute, and you'll see opportunities on previous days. So now you'll slide back and you see we were trading inside of my zone still. We were at the midpoint of my zone. We pushed up and then pushed down, but we came from this high up here. So this is a day where the market fell. Let's look at just that. So now, like I said, every morning is the wild, wild west. Comes up here. I'm sure I would have a zone here, and my zone would probably start from this point to this point down here where we started up, just because you get this. But at the very least, I would draw these lines. Boom. where we were trading at the prior day. Boom. And as you can see, we're lining up with the prior day here. So when we came up there, I'm like, that's not real. Unless it like really breaks through. If you see a wick on top, that's not real. It's not breaking through. It has to like massively smash through these price points and go up to here for it to be a day where we're going up, right? So then you see right here it stops, goes back up. When it rejects off that line again, that's 945, I would hop in a trade for puts. Boom, it comes down here. When it starts to wick up, I would honestly hop out of the trade. It's at the end of the 15 minutes. Next candle starts pushing down again. Yeah, I didn't get all the money, but I did get paid. And that's a key. If I see it pushes down again, because like if you win, you get to play again tomorrow. If you lose because you're guessing and it does fire up, and you lose that entire block right here, because look at this is a great block. That's 429.73 all the way to 428.70. That's $1 block. That's good money. That's fine. And then a lot of times I'm not playing my full account, so I can just get back in another trade. When it wicks up right here and I see that it's pushing back down and it lines up, as you can see, it lines up perfectly with where I was. I'm gonna draw another line there so you can see how it lines up. That's why I draw so many of these lines too, is I want to see where these prices are lining up, where they meet and they push down. And another thing is, you see it push back up, it met here. So now that means that these sellers have pushed down to that area. So now that the sellers have pushed down in this area, I now know that none of these future candles are going above that zone. You got our demand zone, which used to be a supply, well, it's a demand zone here, it became a supply zone. When you see sellers push down and you draw these lines and you see that wick there, you're like, okay, it is, the sellers have come with that candle. The sellers came with this first candle. You don't see it go back above. That's confirmation all day long that the sellers are pushing the market down. They're pushing the market down. Now you start to see, boom, we break through a demand zone and we come down here. All right, so now in this area of the day, I won't trade. And all this up and down, I will not trade. Usually I'm done trading for my day between 11 and 2:45. All right, so now we see a lot of up and down. Then finally we declare again up here. So I draw another line, and as you can see, my lines match up across 2 straight days. You get the wick, it pushes down, wicks back up right there. Same thing it did in the morning. I'm out of that trade. That's fine. That is just about $1. I'll take that. Boom. It's usually going to be like 20, 25% of your trade anyway. So I'll take that. It wicks down again. I got another opportunity if I want to get in there. And now you come down to this 426.14 line, and you start to see that every single day, these support and resistances and these supply and demands, because these lines will be supports and resistance, they bounce right at that support. 1 time, 2 time, 3 time, broke through. 1 time, 2 time, sits in the middle, comes back up, pushing down lower. Now you got another line here. 1 time, 2 time, holding right there, meaning that it's starting to push up. And now you're sitting in the middle, and then you push above, and everything's just kind of right above that support line, heading back towards my supply zone. And then you slide over to the next day, and then there you are. So now you break through the support, but you stay kind of in the support area, which shows you that it's going to push back down. You do get a breakthrough, but if you get a big breakthrough in the night, then you know that your next day is going to be pretty good going north. But you really didn't. You kind of came back down into the zone, pushed up to the top, held there, pushed all the way down. Kind of a key indicator that you're staying below in that zone or pushing below the zone. Now we'll go back another day. Now this was a good day where you get a jumbled mess. Let's go to the prior day. Okay, so prior day, we start in the middle. Now this is a morning where I won't trade until 10 o'clock. Okay, you see it's Wild Wild West all the way down, all the way up, and then spike up. Like I said, the wicks are a spike, spikes up, but if you look at it, it does line up with this here. Boom, spiked up to that point, then pushed all the way back down. Now you see the wick forming, meaning that it's kind of going up. Wick forming here, even though it pushed all the way down, it didn't go lower than this, so you're still right in the middle of that candle. Technically, if you're looking at it like that, if you got in right here, technically here you're still green, so you can hold, and then that gives you the time to be nervous right here, but that's only meeting the bottom of the candle. It's kind of zeroing you out, and you can make a choice here. Do I take the little bit of money that I got, or do I hold for another few seconds? If you hold for another few seconds, you see it starts to run back up. Once I see that turn green, that will become excitement. you know, but like honestly, I would just wait till the 10:15. I see this bounce, I see it slow down right here. 10:15, it lines up perfectly. Add a drawing. And then that's where I make my play. Like I say, I look for these when I'm making my play. I look for this to line up. If it lines up like that, I know that my play is gonna shoot up. Okay, as you see, it lined up perfectly right here. You know, there's no understanding as to why they line up so perfectly every single day, but it happens multiple times. It happened here, it pushed down, you know, it lined up, it's obviously gonna push up a little bit. It lined up again, it pushed down some. It lined up again, it pushed all the way back up. And you see the next one didn't line up perfectly to push all the way back down. It was right above it. This one was right above it. This one lines up, pushes down, then it lines up again, pushes up, then it lines up again, pushes down, then it lines up again, pushes up, then it lines up again, pushes down. You see it happening over and over and over again. Lined up again, pushed up, lined up again, pushed down, lined up again. This one is a little different. This one's a big wick, sit in the middle. That's not confirmation of a push up yet, because in reality it's just sitting right there at the very bottom. So yeah, that's not confirmation that's pushing up, so it pushes down. All right, so you leave that candle alone. You either get out right here where it's green and bouncing up and down, but right here it lines up again, pushes up. This is another beautiful pattern. I love when this forms. This is a reversal pattern. It's a snitch. I call this a snitch right here. This right here is snitching that this is about to be a big drop, boy. You get a shot up, get that wick, that little bitty right, little hip tan. Then this is telling me that, oh, this is about to fire off. I like that. When that happens and it closes right there and it jumps up a little bit and you see it meet right here and right here, I go, huh, look at it. Look at it. It's right there in the line at 432.60. I go, huh. I probably don't get in right away until it turns, you know, red again, but I would get in right here at my line at 432.60, and then booyah, that's 15 minutes of straight fire. You talking about, we started at 432.70, we ended at 430.87, which is 432.90 basically. And then I would just get out because it would start turning green right here for a second before it became red again. I don't care about this. I don't care about not getting all the money. I care about matching this candle exactly. It matched exactly. Why would I I'm not gonna play with that. Boom, goes all the way up. Get that little bitty guy right there. He like, chisel, chisel, chisel. And then it does it all the time. You'll see this happen all the time. Fires all the way down, matching candles. Matching candles are just the most beautiful thing in the world to me. I think I've been talking a long time, but I want to show people how I draw my zones. So now if I was drawing zones based off of this, you know, go back to where we were looking at Apple and how Apple indicated all these trades, because I do want to show you that Apple does this every single day. So this is, slide back over here, 1, 2, 3. All right, we're gonna go back 3 on this one, 1, 2, 3, and we're gonna show you how it matches. So Apple, down here trading in the middle, down here trading in the middle, draw a line right there. And so what I'm gonna look for Apple to bounce off of is this point here. Come up here, you see that it matches there. You see they match across these two. So it comes down here. No, it doesn't match up because this is pre-market. And this is one of those days where you can actually get in as soon as the market opens, because you would be at the bottom of a zone here. If I draw a zone, you'll see that we'll be at the bottom of a zone. So that's showing you that, hey, we're gonna bounce off of that. And as you can see, it's scary though, shot all the way up here. And as you see it rejected, because it rejected quick. As you see something rejecting quick, I would say get out, just from the standpoint that you could lose money in that 15 minutes and you don't know for sure if it's going to go back up like it did here. But as you can see, it matched up. It didn't line up where it matched here to push down, because that it came down here and not wicked all the way back up or whatever, and instead it stayed right here. That would indicate that the market was going to push down and maybe break through the demand zone. So it pushed all the way up, lines up, pushed all the way down, lines up, pushed all the way up, broke here, created this, which actually symbolized that it was going to push up some more, because it never overtook this candle. It didn't even wick down that far. It wicked up, pushed down, turned a little red. That a lot of time that just to shake people out of a trade. A lot of times this is just to shake you out of a trade, and then boom, fired off. Okay, let's go over to the SPY SPY side. SPY did the same thing, started off down here green. Okay, so the market opened green, shot up. Oh, in that case, pushed down, shot up, came down right here, shot up some more, just like that. Turned red, came down, came down. You get this little come down, turn green. And then see on SPY, SPY was also probably reacting to some other things here, right? So it did push down more. Apple wasn't the key indicator on this particular time. So if SPY does break off of what Apple's doing, I will stop looking at Apple and just pay attention to what SPY is doing. SPY lined up perfectly right here. Apple lines up perfectly right here. That's 11 o'clock. That's 11 o'clock. You're seeing it real time happening over and over again. Shoots all the way up, shoots all the way up, shoots all the way up, 11:15, shoots all the way up, 11:15. It wicked down at 11:15. It wicked down at 11:15. It lined up right here at 11:30. It lined up right here at 11:30. Start 11:45 starts going down. 11:45 starts going down. We get that same correction where it lines up here and says, "Hey, I'm going up again." Starts going up. Starts going up. Gets that down. Gets the down. Gets the up. Gets the up. Gets the up twice. Where are we at now? What time frame is this? This is 12:25. So 12:25. 12:15. You get the up. You get the up. As you can see, you get the up and the up. And then you get the down, then you get the down, then you get the line up right here. So now 115, where we at 115? 115, we're going down. 115, we're going down. We stop right here, get that little mix bump joint. Stop right here, get that little mix joint. Shoot up again. Shoot up again. We start going down. We start going down. All right, 1, 2, 1, 2, turn green. 1, 2, turn green, turn back red. 1, 2, turn green, turn back red. Line up right here perfectly, fire off of there. Line up right here perfectly, fire off of there. Yes, this one stayed green because of the strength of that candle. This one turned red because of the weakness of this candle. So it wicks up and pushes down. On the SPY side, you do have other factors holding it up, but it pretty much did the same thing. Massive candle off of Apple, massive candle on SPY. In the day on a high. In the day on a high. Boom. Push down, choppy, 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 choppy. Push down, choppy, 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 choppy. Massive push down. Gap down for Apple. Massive push down for SPY because other things are still holding it up. Push down, push down, push down. So the dance happens every single day. I want you guys to see this dance is happening every day. We're in a negative market now, so it's pushing down. You come out here, it's pushing down. You actually get a green candle on SPY. Trick. That's a trick. That's why I'm using Apple as my indicator. This green candle on SPY is a trick. I'm using Apple to watch this. Apple's pushing down from this wick here. All right, that's kind of where you're meeting the jump off of this point. Jumped up there. So it jumped off this point, jumped up here. That is a trick. Apple is still pushing down. Pushes down massively. SPY pushes down massively too. You start to get this line up right here where it jumps up. You get another line up right here where it jumps up. You get the push down. You get the push down, you get the push up, you get the little red candle. So it's just gonna do it every single day. Your zones matter from the standpoint of showing you what you're looking at in that particular day. Zones show you where the market is that day to the best of their ability. But this thing is gonna happen where you're gonna get plenty of indicators every day. You're gonna have plenty of opportunities to make a trade. You don't, if you're using logic and technical analysis, you don't have to feel nervous. You know, and I know this video is really long and I showed you a lot of stuff. It doesn't matter. I said the same thing the entire video. I just wanted to show you that this happens every single day. I don't care if you go back to the beginning of the week on both of these days for the 5 for 5. It did the same thing. This is another day where it's a scary trading day. On these days, I skip. On massive wicks, if I can't catch the move, I would scalp one of these candles, right? But look at how massive those drops are. It shoots up like crazy, which is great money. But it's nerve-wracking because of boom, fall all the way up. Nothing can stop us. We all the way up. Boom, another fall. Then it grows all the way back up. Boom, another fall. It grows all the way back up, and we're hitting new highs, but it's massively falling, and then finally falls. And I can't predict this. I can't predict that this is gonna stay up or not. with relative ease. You know, you see it bounce off of the demand zone here and shoot up, but then look at these crazy wicks. It's really just sitting right here in this area. Finally breaks to the north, lines up, pushes south, lines up, pushes north. I wouldn't trade this day. That's not a comfortable day for me. I don't like that at all. I don't like jumping up and jumping down and jumping up and jumping down. It's great for like some quick cash on a little 5-minute scalp here and there, but that crap, if you're holding, man, that's nerve-wracking. Now on a good day, the next day is a great day. So we had that choppiness all day long. We gapped up, showing you that, hey, the market's going in a positive direction. Pushes back down. This is the demand zone. I don't have to draw this for you to know it's the demand zone, but if you want me to draw it, I'll draw it. Go ahead, add the drawing. That's a demand zone. Go ahead and edit the properties. We'll just stretch it out over the next day. That's a demand zone. We bounce off the demand zone. We shot all the way up. This would be the supply zone for the day. This would start here and then wick all the way up there. So let's say we broke through the supply zone. But if I was starting my supply zone, I'd add the drawing, do a rectangle. This little area here. I would honestly, this would be one of the few times I would take the wicks for the day. Edit that. We're just going to make that the whole day. And yeah, if I go back on the 4 hour, I'm going to see these two. So 4 hour. Oh, probably should have done that before looking at what time that was. The 5 day. Screw to the left. Crazy day. Good day. Okie dokie. Well, whatever. I don't have to do this. You get the gist of it. So now we scroll to the left. Crazy day. Wickety, 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 wickety. And on SPY, you can see it's doing what Apple is doing, but it's really just staying. It's range bound. It's staying right in the middle. Shoots all the way down. Massive wicks pushing down, making you think the market's going to push down the next day. But then you scroll to the right. And remember all those zones that I drew? There they go. All that up and stuff like that, and down, and all that down and up, and all that jazz. Pushes up. Gets choppy, pushes down. Makes that beautiful thing in the afternoon. And we do this every day. Honestly. Happens every single day. You can make these trades 1 day, 2 days, 1 day, 2 days. You can make these trades every single day, guys. Massive drop off. What is this, a 5 minute? No wonder that looks so terrible. It was a 5 minute, 1 day, 15 minute. I'm sorry, 5 day, 15 minute. No, 5 minute. So 5 day, 15 minute. Go to the next day. Massive jumps up. Stops up here. Finds that mark where it hits the high, breaking through the support. Find some resistance. As you can see, a wick is just, again, a wick is just a, I forgot what the hell I was talking about. It's getting late. I'm gonna take me a nap. A wick is just a, I don't know, guys. It's getting late. That means it's time for me to cut the video if I can't figure out what the hell I said. It's not a real price. It's a spike. There we go. A wick is just a spike in price. The price spiked here, shot up there, went on back down. It spiked here, shot up there, lined back up with this. By the time it lined up with this, I've already made my trade where it's pushing down, wicks up a little bit more. I'm not worried about it going up some more. It pushes down, lines up here, forming this little tiny joint, the little hammer, little Mario hammer, and then it shoots back up, lines up again, shoots back down. Like we've been over this a few hundred times. You get it. You know, be confident in yourself and just execute. No excuses, just execution. You can do this multiple times in the day. I'll show you 1 trade time, 2 trade times, 3 trade times, 4 trade times. These are smaller trades, scalps. 5 trade times, scalps. 6 trade times, 7 trade times. Ignore this. Ignore this. 9 trade times. 10 trade times for a massive trade if you want that. And you're out. You know, 10 trades on this day you could have made. Some were smaller for scalping. I do all of them. I do the big ones, I do the small ones. It doesn't matter to me. You can hit money at all times of the day if you're patient and watch for your setups. You know, watch for your lines. Draw your little lines. If there's some hard price action going on where something lined up, draw a line. It's gonna happen again. It happened again right here. Bounce off of this line right there, bounce off of the line again right there. It's showing you, the market's going to show you all day long exactly what you need to see. I don't care if you like trading in this little choppy time right here in the afternoon, or if you like trading late at power hour, or if you like trading in the beginning of the day. No matter when you trade, you're going to see setups. Find your setup and hop in your setup. If you're wrong and the market turns horribly, you get out. You take your little 10% loss and you live to fight another day, or you trade again in the afternoon. There's money to be made. Just be confident and execute. No excuses, just execution. Remember your 3 C's. Be confident, be consistent, and monitor your cash flow. I'm going to continue to work on this $250 account now, but a $200 account to start. I'm at $25 a day. I only needed $20 a day. Yes, there's plenty of times where I could ride massive trades and make a lot more, but I want to show that the barrier to entry for this is not that high. It's not that difficult to make decent money in this market. You don't have to become a millionaire overnight. You want to learn how to build an account and how to make efficient trades. And as you make more and more efficient trades, eventually you'll get to the point where it's like, you know that I can play a lot more money in this trade and make the money faster. It's not changing your trading style. Like, I'm not gonna go from $60 to putting my entire account in a trade. I'm gonna continue to trade. Now I can trade $62.50 per trade, right? That's a quarter of this account. I'm gonna continue to trade $62.50. If I had $2,000, I can now trade $600. If I was doing 25%, I would obviously be doing about 10% there, trading $200, but I can now trade $600. So where my $60 became $27, my $600 would become $270. And you see, that alone is a good enough trade. I don't need that $600 to become $600 or $1,200. You don't need to 150%, 100 times your money every single day. You need to consistently make money and then catch once in a while these big boy joints right here where you see something happening where you're like, that looks like that's about to be nice. And then you make that nice play and skadoosh, your account balloons on those days. But that's not what you do every single day. It just doesn't happen that way every day. You know, keep getting better every single day, guys. Everybody takes their own amount of time to get where they're going. I'm not perfect at this. I get some stuff wrong, you know, but I try to be as consistent as possible so that when I do have my pitfalls, I can bounce up out of there, do better the next day. You know, and if I lose money, I'm never looking at revenge trade. If I lose money, I'm not looking to make it back immediately. I'm just looking to make anything. A few dollars just to keep my confidence growing, to keep knowing that overall I'm doing it right. Overall, I'm making the right choices, but I gotta go. I mean, I ran this video probably like 30 minutes, 40 minutes. I'm sorry, you know, but I wanted to really show you guys here. I'll do one more example of on the 4-hour time frame for Apple, especially me lining up for tomorrow, what I'm looking at. So we're on the 4-hour time frame. We're down here. This is a change. We're just gonna put a little line there. Add drawing. One final time. Boom. Put it right here. Like I said, the wicks are the exception, not the rule. Then I would just go ahead and add a drawing there. Since we're kind of consolidating, but we ended the day right here, I'll add the drawing over the entire candle, this green candle. I will push it back all the way to March. Didn't mean to do that. Edit properties, rectangle number 4, I think. Let me click over here. Edit properties. Cancel this one. We're gonna go back all the way to March. March 1st. Click OK. And then on the other side, we're gonna go edit properties. November 1st. Okay. Scroll all the way back, scroll all the way back, scroll all the way back, scroll all the way back. And you see it. 1 time, 2 times, 3 times, 4 times, 5 times, 6 times. Just a bunch of times. We're gonna hit this line. So this is where we grew up to it. 1, 2, 1, 1, 2, 3, 4, 5, 6. It goes on forever and ever. Then we break above. It comes back down. It comes back down. It comes back down. It comes back down. We're in it. Break out of it. And now we're in it. So the question is, do we break below and keep going lower and lower and lower? Or do we break above? And that we will find out the answer to on tomorrow. Now the top of this zone from the prior day would be right here, these two little reds. Add zones here. So now I come across. Boom. And now I would do the same thing here. Pop. Right there. Pop. Click, 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 click. Right there. Okay. And now we go back through. And as you can see, there's plenty of bounces there. Honestly, the zone's a little bit higher. I just put like a random zone, so don't exactly follow this to a T. My zone should be right here, but I didn't actually open it up to see where it would be. So then I would just move my zone, edit. What is that? 174.06. 174.06. Click OK. No, sorry, I never edited anything. Edit the actual properties. So we'll say bottom right, top left at 174. 04, doesn't matter. Click OK. Ooh, shit, that is the wrong direction. I did that the wrong way. 170.4. My number lock is off. Click OK. And now we're covering the top of that zone. Whatever, man. I don't. You get the gist of it, guys. You get the gist of it. 174. Whatever. You get the gist of it. We go to the right. It's that entire thing. I feel like fixing this over and over again. Let's just delete it completely. Remove drawing. Alright, so we got the bottom of the zone here. We're going to open this up on the 15-minute. Or even the 1 hour. Top of the zone here. Edit properties. November 1st. 4. Click OK. Now we'll scroll back across. Go back to June. 4 hour. Start there. And now you see it. Bouncity, 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 break through. Bouncity, 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 break through. Scroll to the right a bit. Too fast. Break out. Go onto the side. But you see bouncity, 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 bouncity in between these two zones. Bouncity, bouncity, bouncity. Go to the right. That's where we're currently trading. So now we have choices to make. Now, ooh, here's a good point. If we fall through here, look how far we could fall. It's on 164. That would be a sexy drop. Like, I don't like whatever happens in the market. It doesn't unnerve me or anything like that. That's a beautiful drop. If we do fall through here, you're talking about $5 drop. That would be a massive, massive move on SPY to the downside, which will put us back firmly in that 414 area. You know, when you think about it, because a 50-cent drop is like a couple of dollars drop on SPY or whatever. So if you're talking about like a $6 drop, that puts us back in that 414, 416 area. But that's it for sure. I'm definitely done now. I gotta stop. All right, catch you guys later. I'm going to bed.